Got the first speaker for the day, CA Mahadev R, onto dais and then welcome him with floral bouquet. I also request him to escort our second speaker, CA Akshay M. Hiregange, onto dais. Yeah, I request Sripath sir to. Thank you. Before introduction of the speaker, I request our Vice Chairman to give welcome remarks.
Good morning, my fellow professionals, esteemed colleagues, and distinguished speakers. I'm delighted to welcome you all for the CPE Seminar on the GST. Today, we gather to explore and discuss aspects of goods and service tax, a transformative tax reform in our nation. As we embark on this enlightening journey with session on cost control and tax planning and GST by CA Mahadevar, his insights promises to enhance our understanding, and I think he's going to discuss most on our case studies and recent trends. I think he's put in quite a lot of effort to see what has been covered during the year and to add some value add. So what is not covered is what is being discussed today. Following this, we'll have CA Akshay Hiregange, who will lead us through the intricacy processes of handling GST notices related to GSTR 1 and 3B. His expertise will undoubtedly be valuable in navigating the complexities of GST's compliance and regulation. After a brief intervention, we will reconvene the session with recent technical amendments under GST law and practical issues with filing the GST by CA Annapurna D. Kabra. Her comprehensive approach to the latest changes in GST law and their practical application will provide us tools which is needed to adapt and excel in our day-to-day task. This seminar will culminate the continuation with CA Annapurna by diving into the technical amendments and practical challenges as well. I encourage everyone to actively participate, share insights, ask your questions, and seminars like this not only broaden our knowledge rather, but also strengthens our professional competencies. Thank you for being part of this seminar. Your presence and enthusiasm will contribute significantly for the success of this event. Let's make the most of this opportunity. Thank you.
Thank you, Vice Chairman. Now, I have privilege in introducing both the speakers for the day. CA Mahadev R. Mahadev R is a partner at HNA & Co. LLP, formerly known as Hiregange & Associates LLP, chartered accountants firm in India. He has been involved in advising businesses across different manufacturing and service industries on various issues under indirect tax from 2011. Heading the Review and Compliance Division of HNA & Co. Bangalore. He also has co-authored a practical guide to GST audits and certification book for Bloomsbury Publications. Fifth edition of this book released in 2021. He has co-authored a booklet titled Cost Control and Tax Planning in Indirect Taxes, published by Hiregange Academy. Authored e-book on indirect taxes for CA IPCC students for Vittam Pravina Gurushala, along with Dr. Rajesh Kumar. He has co-authored a book on goods and service tax law and practice, published by Himalaya Publishing House for Bangalore University Commerce students. Third edition released in November 2023. He is also an active contributor for research articles to Karnataka State Chartered Accountants Association, Journal, Bangalore, ICI Journal, GST Law Times, TaxGuru.com, etc. He has given lectures at Comptroller and Auditor General Office of Bangalore, ICI Study Circles, CII, Hiregange Academy, and Commerce Colleges for various colleges at Bangalore. With this brief introduction, I present before you CA Mahadevar. I would also like to introduce the second speaker for the day, CA Akshay M. Hiregange. Akshay M. Hiregange has qualified as a chartered accountant in the year 2016. He is a DISA qualified in 2021. He is a partner at Audit and Assurance Wing of HNA & Co. LLP, Bangalore. He has experience over 3 years in internal audits, compliance and assistance, and indirect taxes. and in the past 7 years directing focus towards GST, including audit and consultancy matters. He has headed GST impact assessments of various industries such as automobile, software, manufacture, logistics, retail, construction, education, job work, charitable trusts, and many more. He has also undertaken GST trainings for corporate clients and has been invited by various professional communities as a speaker. He has co-authored a book on due diligence under indirect tax and is a regular contributor to GST articles to KSCAA, CA Club India, Tax Guru, etc. With this brief introduction, I present before you CA Akshayam Hiragange. Now I request all the MC members to join us and dignitaries on the dais to join us for inaugurating this session by lighting the lamp.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः दोषः सर्वे तदूना कश्चन कश्चन एतद्वैता 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 एतद्वैता
Team members to come front so that people who are coming a little late can occupy the seats at backside. Thank you.
So to come forward, please, because we want to make it interactive. So that is the whole idea. Even on front rows, you will get CPRs. ಇಲ್ಲೇ ಮುಳ್ಳಾಕ್ಸ್ಬಿಟ್ಟಿದ್ದೀರಾ? ಯಾರು ಮುಂದೆನೇ ಬರ್ತಿಲ್ಲ? Okay. So will you be able to answer my questions from there? Because I will be asking some questions. Yes or no? My wife says CA profession is very, very boring anta. Looking at me, so ಈಗ ನನಗೂ ಅನ್ನಿಸ್ತಾ ಇದೆ. Yes or no? Will you answer? Yes. Good morning. ಇನ್ನೂ ಎನರ್ಜಿ ಬಂದಿಲ್ಲಪ್ಪ. Good morning. Thank you. Good to see the numbers, because I was saying, Pramod, that I didn't expect so many numbers. I was expecting around 40 to 50.
That too in this time, December is a very busy season for us auditors because most of us will be busy with this GST audits. So we are though extremely busy because our firm does only GST work. And some have the privilege of planning for their trips in December month. And of course, most of us have the obligation of filling our CPE quota. I think that is also one main reason for these numbers. I'm just assuming. As Pramod was saying, we were seeing that most of the topics in GST were already covered in this year. When we looked for the topics which are not covered, cost control and tax planning is something which was not covered. What is happening is with this GST compliance, most of us know that GST is more of a reconciliation work. So you have 10 or 20 types of reconciliations which we need to do. If you see the notices also, it is around reconciliation. So in this reconciliation process, we are missing both the taxpayers as well as the professionals. So we are missing on where we can add value to our clients. Is there any way wherein the clients can reduce their cost, or is there any scope for tax planning which can be done, which can give or which can increase their margin? So what I have done is I have taken some real case scenarios which we came across in a recent time. So we have given some answers to the clients on this. So we have so many CAs here. So CA brain is generally there. You're all very intelligent. So I'm expecting few more new ideas, which will be my takeaway from this session. Of course, even I'm short of 2 hours for the CPE quota this year. So lucky that I got this opportunity. So thanks for this. I think most of you have answered yes when I asked you a question that you will answer my questions. So now it is time for you to answer the questions. If you feel difficulty in answering from there, still you have the option of occupying the front rows. Messrs. MFR Limited, I have changed the names, and don't assume that this must be MRF. That is also not correct. Purely some guess name, that's all. So MFR Limited is engaged in manufacture and supply of tires in India and to other countries. So they have around 30% exports. So they are incurring around 8 crores per annum as BCD. On the import of goods, we have something called BCD which will be levied. Then there is IGST, and we have compensation cess also in some cases. So they import a lot of coals which will be used in this heating process. So they are paid around 50 lakh for this year. So they wanted to understand, is there any tax planning which can be done around these facts? So I have ended my question. So now it is time for you to give some ideas. So what can be done around this? Is there any tax planning which is possible here? Hope I was audible and visible. Can I get some answers, please? You can be absolutely wrong also. At least I want somebody to start so that others also will feel like answering. Which one can be offset, sir? IGST amount they can take it as a credit, and they can utilize for payment of taxes. Anything around this BCD and compensation cess which can be done? Sorry? Can you explain what is duty scrip? What can be done using duty scrip? You're right. Sir, PPT share modilla alva? You have not shared the PPTs, right? You have shared, is it? You have not shared. Okay, because he answered my question. I had this as one of the answer. That is correct. So one planning which can be done is, thank you for that. One planning which can be done is, they can purchase RODTEP scrip. There is something called RODTEP. The full form is remission of duties and taxes on export products. When you export the products, on most of the goods, certain percentage of the FOB value, you will get it as a duty scrip which can be used for payment of basic customs duty. So what happens is I may have exports, but I may not have enough imports to use the scripts to pay the BCD component. I can sell the scripts in the open market. So I will sell it at a discount. The discount may vary from say 3 to 5% depending on the value of the scripts. Lower the script value, higher the discounts. So you can consider buying the scripts. Say even if you get 3% discounts in this case, so they have paid 8 crores as the BCD amount. So even if they get 3% discounts, it is around 24 lakhs. So 24 lakhs can be the straight away savings. So if you Google also, you will get many sellers of this duty scripts. So if you have any clients who are having lot of imports and paying BCD on that, you can suggest them to go for a purchase of this rod test script from the open market. So that is one tax planning which can be done there. Thank you for that, sir. Anything else? There are many things which they can do. Huh? Advanced license. Thank you, sir. You are answering all my whatever points I have. Yeah, advanced license is also an option for them to import the goods. As you see, they have around 30% of their sales to other countries, exports. For export of goods, you can import the raw materials without payment of any taxes. BCD is exempted, IGST is exempted, even compensation cess is exempted. So you can import them, but you have to make sure that you are using those raw materials or inputs for the export products. Advantage is they are going to save this BCD component. Otherwise, BCD will become a cost. BCD, we cannot take it as a credit. Anything else? I don't want you to answer, sir. Yeah, others, maybe from this section. Huh? Shared. Okay, at least you can see that and answer. What else can be done? Export unit for sale of this 30%. Huh. Yeah, so I think what you are talking is about export-oriented unit. So export-oriented unit is also a concept wherein you can import all the goods without payment of any duties. So all your BCD, IGST, everything gets exempted. Even if you pay IGST, you have the option of paying IGST also. You can take that credit. So BCD will not become a cost when you register yourself as a EOU or export-oriented unit. So that is also an option, but it comes with a lot of compliance. So you need to do some cost-benefit analysis around that, whether the savings which I am going to make, will it take care of the compliance cost which I am going to incur for this compliance. So that is something which I need to take care of. Good, sir. Anything else? Can they do anything for this compensation cess? So they are paying almost 50 lakhs as the compensation cess. So can they get it back? So in GST, when do we get refund? Is it that you don't know the answer or you don't want to answer? Sorry, somebody is answering, I could not hear. Yes, sir. Refund. Yes. So in GST, we get refund when we have export of goods. So here I mentioned that they have around 30% of their sales as exports. So the compensation such which they have paid, to the extent of this 30%, they can apply for refund as well. So when we did the audit for this company, so they were very, very compliant. So this was one value addition which we could give them. So they always thought that compensation cess is not eligible for credit. Therefore, it was becoming a cost to them. So we said, since you have a significant export, which is 30%, so now they are getting close to 1.2 crores every year as the refund of this compensation cess. So wherever there is a compensation cess which is being incurred and they have exports, so this is also something which you can see. What else can be done? Any export benefits which are possible for them? on export of goods. Would you like to answer, sir? Duty drawback, yes. So on the other option which can be possible for them is duty drawback. When you use this imported goods, so you would have incurred BCD also in most of the goods, right? So we have a benefit called duty drawback on the export of goods. There is a schedule for this, so we need to see what is our product HSN, and for each of these products there will be a duty drawback rate as well. So for tires, I think it is around 1.4 or something like, I think 3.6% for tires. So on the FOB value of their exports, say 100 rupees is the export value, so 3.6 rupees they will get it as a duty drawback which they can get. So this is also one value addition which can be given for them. Anything else which you think can be done for them? The other possibility is import of capital goods. Since they have exports of 30%, they can import their capital goods under EPCG scheme without payment of any duties. They don't have to pay BCD, no IGST, no cesses. But the condition which comes with this is they have to export goods worth 6 times of whatever duties they are saving. Say they are going to save 1 crore rupees duties. In next 6 years, they have to export goods worth 6 crore rupees in 6 years. And this is going to be over and above the average exports which you have for past 3 years. Say past 3 years you have an export turnover of 10 crores on an average. So you have to achieve a turnover of 6 crores above this 10 crores. So it has to be 16 crores. So advance authorization, he has already mentioned. There is also something called as duty-free import authorization. In this scheme also, you can import the goods without payment of any custom duties. But these schemes come with certain conditions. So you have to use these goods within a period of 24 months. Then you have to export the goods. You should not use these goods for any other use. So like this, there are a lot of conditions which comes with this. Purchase of rod tape scrip, yeah, he has all mentioned. We have discussed this. There is also option of procuring all these goods under different schemes at concession rate. For example, we have a free trade agreement with Japan. So when you import certain goods from Japan, you get the goods at very concessional rate. Say the basic custom duty is 10%. But in this case, when you import from Japan, it can be as low as 2%. So we have something called as a preferential trade agreements. So there are certain countries, certain goods, wherein the goods can be imported at very concessional rates. And we have CEPC also, Comprehensive Economic Partnership Agreement. So we need to study these 3 agreements to see which countries are covered here, which goods are covered here, to see if we can import it at a concessional rate. The biggest advantage if your goods and the country covered in this scrip is, in all the above schemes, there is a export obligation which we need to make. But when you go for this concessional rate under these 3 scrips, so there is no export obligation. So when you import it, you have to meet certain condition. You have to prove that the goods are originated from the country wherein you are importing. Say Japan, from Japan you are buying, so it should be manufactured in Japan. So that is the only thing which you need to ensure. Otherwise, there is no other obligation for you. You may use it in supplying in domestic market, you may export the goods after production. Anything can be done with these goods. So that is the biggest advantage when you go for this. The other thing is duty drawback which we covered. So for tires there is a rate of 3.6% or there is a rupees 9 per tire. There is a cap for this. So maximum can be rupees 9 per tire. This rod tape scrip which we discussed in the beginning. So in this case for tires, rod tape scrip is also possible. We have seen cases wherein many of the taxpayers are claiming either rod tape or duty drawback. There is no restriction on claiming both these together. You may be claiming duty drawback, you can also claim rod tape scrips. So in this case, they were able to get 1.4% as rod tape scrip, which can be used to pay their basic custom duty. They will get it as a scrip. Duty drawback, you will get it in your bank account. That is the only difference. Next is Moon Pure Oil Limited is engaged in supply. I think most of you must be using this Moon Pure Oil. They import crude oil and some services, import of services. Domestically also they procure goods and services at different rates. Since edible oil is subject to 5% GST, there is an accumulation of around 100 crore ATC. So there are no export transactions in this case. So can there be any tax planning which can be done? So you can see that they have a lot of accumulation. They have all the procurements at different rates. 12% they have, 18%, some goods which are subject to 28% also. So can they do something in order to encash this accumulated credits? So, yeah. Refund, unfortunately, they will not get refund from last year, sir. I think July 2022 or so, they added this edible oil to restricted goods for refund. So before that, they were getting refund. So they became unlucky from last year. So they cannot go for refund now. That is why I have this as a case study. If refund was the answer, I wouldn't have added. Please try all of your chartered accountants. Mostly are chartered accountants, alva sir ille? All. Because I saw the option non-members also can attend anta, adike I was asking. Yes. Anything can be done? Will you keep quiet like this if they come to you? They will ask you for a suggestion. You want to try? Okay, we'll see what is there. The first thing which they can do is ensure that their vendors are charging correct rate of taxes. When I'm able to take full credit and utilize it, so I will not be bothered about the rate of tax which will be charged by my vendor. He should be charging 12%, but he is charging 18%. But I will not bother about it because even if I pay 18%, I will get it as input tax credit. But in this case, because they will have accumulation, they will not be able to utilize this credit. It becomes a cost to them also in future. Unless they start some new business with a very good margin and utilize this credit in future. Right? So I need to do this exercise first to ensure that all my vendors are charging correct rate of tax and they are not charging higher rate of tax. Next can be incurring this expenditure on behalf of the vendors. Say for example, we are doing the audit of this Moon Pure Oil Limited. So we have to visit them, there will be accommodation expenses which will be incurring. Say for audit we are charging 5 lakh rupees and there is an expenditure of travel, accommodation of around 1 lakh rupees. So what is the rate of GST which I am going to charge? CA services, what is the rate of tax? 18%, thank you. So on this 1 lakh rupees also should I charge 18%? So 5 lakh is my audit phase, 1 lakh is my expenditure. So this 18% should I charge on 5 lakhs or 1 lakh? Or total 6 lakhs? 6 lakhs, correct? So this 18% on this 1 lakh is also becoming a cost to him. It is getting accumulated to him. So what I can suggest is, so in this case, I will ask the auditor, if I am from Moon Pure Limited, I will say, so all your accommodation, all your travel, I will take care of it, you don't incur that expenditure. Or I will tell him, you incur the expenditure, but we will work under pure agent model. I think most of you must be knowing this pure agent concept, wherein if I don't keep any margin and if we agree prior to incurring the expenditure that I am going to incur this expenditure from so and so vendor, I don't have to add it for payment of GST. So I will enter into this model wherein I am going to charge GST only on 5 lakh rupees and 1 lakh rupees will be actual expenditure without any margin and I am not going to charge any GST on that. So this is some planning which can be done by them to reduce the accumulation. The other possibility, so this was possible before July 2022 for edible oils, but still there are certain goods which are at lower rates, which can be 5% or 12%, and they can go for refund of taxes which are accumulated. Say for example, agarbatti manufacturers, so the rate of tax there is still 5%. The accumulated credit they can still go for refund. So in this case, they can see if they can convert their job work transaction to purchase and sale transaction. Why I am saying this? In case of inverted duty structure, the refund will be restricted to only inputs. Input services, whatever GST I pay on my input services, I will not get it as refund amount. So I need to see, is there any way out wherein I will convert my service transactions to inputs. Instead of input services, I will make it inputs. So if I have any job work transaction, instead of sending him the goods, I buying, then sending it under job work model wherein he will charge me job work charges, I will say, I will sell you the goods, you do the processing, again you sell it back to me. So that it becomes an input for me and I can go for refund. So this is some planning which can be done by them wherever they have job work transactions. Second option is which one you are talking? Huh. No, in some cases it becomes a cost to us. Say for example, this Moon Pure oil is in, say, Tamil Nadu. So I am an auditor from Bangalore. I am traveling to Tamil Nadu. I will incur accommodation expenses. So he will charge me CGST, SGST, their accommodation, which I will not be able to take credit. So on that amount also I am charging 18%. So like this it becomes a cost. Say I am hiring rent-a-cab. So rent-a-cab I will not be able to take the credit. On that also I am charging 18%, whereas the rent-a-cab fellow would have charged me only 5%, possibly. Thank you for that question. Anything else which can be done in this case? Assume he is your client, he has come to you, he will say that I will pay 20% of whatever savings you are going to make him. Though we are not supposed to enter into such agreements. Anything else can be done here? Okay, we'll move to next case. Outforces Limited, so they are engaged in export of information technology services. There have been instances wherein full export consideration is not being received, though all other export conditions are being fulfilled. So what are the major conditions for export of services in GST? Export conditions? Money has to be received, so consideration has to be in foreign exchange. In some cases it can be in Indian rupees. What else? Place of supply should be outside India, that's correct. Where the recipient should be? Can he be in India also? Or he has to be outside India? No, my question is for export of services, sir. So recipient has to be outside India. Provider has to be in India, right? So in this case, outforces, so they have fulfilled all the conditions. The only condition which they are not able to fulfill in some of the cases is they are not able to get full consideration for the exports. Because I am not satisfying one of the condition, which is receiving the export consideration, so they are worried that department will demand GST on this unrealized portion. And already we have seen cases wherein department has issued notices also. So anything which can be done here to take care of this aspect? Yes, possible, sir. The first thing which they need to consider is, though we do this in domestic transaction, but we somehow fail to do it in case of exports. So we have section 34 in GST which allows us to issue credit note in certain scenarios. So one scenario which is covered here is whenever there is a deficiency of the service. First we need to understand why the customer is not paying. So one of the reason could be there is some deficiency in the service. So if that is the case, then we should consider issuing a credit note before the time limit. So I'll issue the credit note. Say 100 rupees is my export value, 10 rupees he has not paid me. To the extent of 10 rupees, I will issue a credit note before November 30. Yes, that is also there. But I'm not sure if that can be done in all the cases, because in most of the cases, the customers will be in a dominant position. But wherever advances are possible, yes, that is the best way. So you receive the advance so that you don't have this issue of unrealized value at all. That's correct. So wherever you see that the amounts are not received, you can suggest your clients to issue a credit note to the extent of that, so that we are not bothered with this any demand on this unrealized portion. The next question which comes is, can we issue this credit note after the due date also? Because if we see this November 30th, it is for adjustment of our GST liability. Now in case of exports, since I don't have the GST liability, so can I take a contention saying that since there is no GST impact on my export transaction, I can issue the credit note under section 34 even after the time limit. But still this is not tested and answered, but this is one contention wherein we have a remote chance of arguing and having the case in our favor. The other possibility is, before GST we had service tax law. So service tax law, it was very clear. If you don't receive any export consideration, there was no demand of tax on your output service value. You had to treat that value as exempt supply and you had to reverse the input tax credit. Say your total export value is 10 crores, you have not received consideration of 1 crore. So 1 crore will become your exempt supply. So 90% is taxable, 10% is exempt supply. So 10% of credit you had to reverse in service tax regime. But in GST, unfortunately, we don't have any clarity on this. So can we follow this in GST also is the question. Because exports, we understood the conditions. Somebody said the place of supply has to be outside India. So when the place of supply is outside India, can it be taxed in India? So that is one question which is still open. So the contention which can be done here is, the place of supply is still outside India because place of supply provisions are clearly supporting our view. Information technology services. So we have to see the recipient place to see where is the place of supply. So customer is outside India for this, place of supply is also outside India. So because of this reason, there should not be any GST demand on this. At max, we have to treat this as an exempt supply and we will reverse the credit. So this is one possible contention which can be taken here. The next case is Narendra and Narendra Limited is engaged in manufacture of motor cars. So Mr. Narendra has decided to gift certain goods during annual celebration event to all the employees. From the purchase order, he found that there is a GST of around 15 crores which has to be incurred against these gifts. Now he is reconsidering his decision to avoid additional cost of 15 crores. So why this 15 crores becomes an additional cost to them? Gift is chargeable to GST, yes. Can they take credit of this? So that is why he is worried. So what can be the tax planning around it? Don't give gifts. What else can be done? Huh? Lease value. I understood. Understood. So what he is saying is, you make sure that the value of the gift which is given to the employee is less than 50,000. Okay. But still, will it help him in taking the credit? Say the value is 40,000 rupees, whatever gift he is giving. Can he take the credit? This Narendra and Narendra Limited, can they take credit? Credit will be restricted because 17.5 is very specific. Whatever gifts you are giving, so you will not be able to take the credit. This 50,000 is for taxability of gift. So you are giving a gift more than 50,000 rupees, then it becomes taxable in the hands of the employer. So that's a different impact. Yes. But issue here is employee and employer, they are related persons. So in case of related persons, you have to consider the open market value. Say 40,000 is the value, you want to charge say 10 rupees. But you have to consider open market value wherein on 40,000 GST needs to be paid by the employer. What else can be done? ಸುಮ್ಮನೆ ಇದ್ರೆ ಫೀಸ್ ಕೊಡಲ್ಲ ಸರ್. Can they consider giving a cash gift? Possible? ಆಗತ್ತಾ? Is it possible? Any income tax issue? Because I don't know income tax, that's why I'm asking. Huh? It will be taxable for recipient, alva? Okay. But GST impact anta iralla. So instead of buying these gifts, incurring 15 crores extra, I'll give 40,000 cash voucher or something like that. So is that possible? Possible, okay. So that is something which I have written. The other possibility here is when I am incurring GST of 15 crores, so the value of goods must be at least close to 90 to 100 crores, right? So event must be very, very big. So I am sure we are going to have some event management company to manage all this. So what I will do is, instead of this company buying these gifts directly, I will ask this event management company to do some events. So give this products also as a gift item. When this event management company charges me, so is it a service or goods? They are managing the entire event. They also have some goods which will be distributed to the employees. What is the supply here by the event management company? Is it a service or goods? It is a service. It becomes a composite supply. He is supplying some goods also, but it becomes a composite supply because principal supply is event management activity. So when it becomes a service, then the chances for me to take the input tax credit increases. Though we have seen cases wherein all the celebrations, the input tax credit have been questioned. But there are many court rulings in the past also wherein in case of all these functions, event management credits have been always allowed. So in this way, we can save on this amount also because the event management company will take the credit and distribute this as a part of their service activity. So that is one possibility which I could see here. Anything else which is possible here? Because I could think of only these two things. Yes, sir. ಇರ್ಬೋದು, ಅದಕ್ಕೆ ನಾನು ಕೇಳಿದ್ದು ಸರ್. ನಂಗೆ GST ಮಾತ್ರ ಗೊತ್ತು. ಸೊ ಇನ್ಕಮ್ ಟ್ಯಾಕ್ಸ್, ಲೇಬರ್ ಲಾ, ಇಫ್ ದರ್ ಇಸ್ ಎನ್ ಇಶ್ಯೂ, ಐ ವಿಲ್ ನಾಟ್ ಬಿ ಏಬಲ್ ಟು ಆನ್ಸರ್. For the employee, it will become taxable. Gift also will be taxable, is it? Okay, so no income tax issue then, correct? It is neutral. Yeah. Anything else which can be done by them to reduce this or avoid this cost? Shall we move to next case? 1050. Auto Parts India Limited is manufacturing certain auto parts for Telsa Incorporation USA. In the course, certain tools and dies were manufactured with billing to Mrs. Telsa Inc. So, however, they are not physically exported. So, Auto Parts Limited, so they are in India, so they are manufacturing certain parts and exporting to Telsa Incorporation. They wanted some tools also, which is being manufactured by themselves. However, this CEO of Telsa is not happy with GST being charged. Because these dies or molds are not being physically exported, because I'm using this in manufacture of these parts which are getting exported. Tools and dies, I will not export it because I need it for use in manufacturing activity. But I have to charge GST on these tools because physically the goods are not moving. In GST, in case of goods, to treat it as exports, physically they should move out of India. So this Auto Parts India, they are saying they will charge GST on this because this is not an export transaction. But the CEO of Telsa is not happy. Who is the CEO of Telsa? He is CEO of Tesla. This is Telsa. So he is not happy. So we are charging 18% of these goods. So he is not happy. He is saying, I will consider the option of moving this order to maybe country like Australia, because in India you are charging me GST. Can they take credit of this when I charge GST to this US company? They cannot take. Yes. So any tax planning possible here? Except the answer of don't manufacture these tools. Claim it as design charges. Yes, possible. But again, litigation also will be there. Because you have end of the day, what you are coming out is with the tools or dies. But there is some possibility, at least not 100%, maybe some value, say 50-60% can be treated as design charges or development charges. Maybe balance portion I will try to show it as a value towards goods, wherein I will pay GST only on goods. But again, the biggest risk here is, end of the day, what is the supply? The customer is interested in tools, so department can always say that this is a composite supply, principal supply being supply of tools. So that risk is always there in this, but there is a remote possibility. Yes. Even SCZ also, in SC, yeah, that possibility is there, sir. Yes. Yeah, I see some possibility there. But thing is, the goods are not moving out of India. To treat it, even if SCZ has to get the export benefit, the goods should physically move, sir. Can they send these goods to US and get it back? Possible? Yes or no? Huh? As a job work. See, the condition is that I should move the goods outside India. So I will send the goods to US, then let them send it back, because in customs there are notifications which gives the custom benefit also, if I am importing on a temporary basis. So I will export it, then I will import it on a temporary basis. That is possible. Anything else which can be done? So one is supply the tools to US physically, get it back, that is one option. The other option is like one of us mentioned, so treat it as a design service, but treating entire value as design service may be very risky. Maybe some portion can be treated as design service so that the GST is limited to value of the goods. The safer option will be don't charge anything for the tools. You take it as your cost. You are the manufacturer, you don't charge separately for these tools or dies. What you do is, you increase the price for your parts which you are manufacturing and supplying to your customer. If fund is the issue for you, then you can always get the advance amount towards the supply of parts from your customer. So you are anyway manufacturing and physically removing these parts on which there is not going to be any GST. So this way you can avoid payment of GST on the molds or dies which you are going to manufacture. So this is something which can be done here. Next is Lele Mall. So they are having a supply of exempt supplies. I think most of you would have gone to malls. So some portion they will be selling all this grocery, hypermarket will be there. So groceries they will be selling rice, wheat, whatever it is. Most of the goods are exempt from GST. They also have gaming activities. They also have sublets, many of the floors wherein they will get rental incomes and they pay GST on that. So in this example, around 40% of their turnover is exempt because they have all these grocery sales. 60% is taxable supplies. Now this founder of Lele, he is not happy that they are losing 40% of their input tax credit. In this case, how do they take the credit? Can they take 100% credit in this example? What is the percentage of credit which they can take? 40 or 60? 60% they can take. Now question is, can we do some planning wherein this percentage increases? Yes, sir. Perfect, sir. So what sir is suggesting is have it as a separate entity. So grocery separate section, all other taxable activities separate section, so that you have a separate invoices for this groceries wherein you will not take 100% credit. In all other cases you will get 100% credit. Possible, sir. Anything else which they can do? The other possibility, if they don't want to have a separate registration or a separate entity, they can always suggest the service vendors to give a separate invoice. Say in this case, so this grocery is there only on the ground floor. I have other 2 floors which are let out for other sporting events, etc., wherein I am paying full taxes. So when I pay rent on these 3 floors, my credit restriction should be only 33% because only 1 floor is being used. So I will request my landlord to give me a separate invoice for this ground floor wherein he will charge 33% and balance 66% he will charge towards other 2 floors wherein I will take full credit. Can I do this in case of other services also? Is it possible? What can be the other examples wherein I can do similar planning? Rent is one. Housekeeping, can I do this? Housekeeping expenses? I can do this. Say they are giving me a bill for all 3 floors cleaning. I will say you give me separate bill for ground floor cleaning, separate bill for 2nd and 3rd floor. Can I do this for manpower supply contracts also? Say I have 100 employees who are on a contract basis. So 20 are working in my grocery shop. Now presently I am losing credit on 40. So I will say you give me an invoice separately for these 20 contract employees who are working in this grocery store. With this planning I can reduce my credit reversal. So this credit availment can be more than 60% when I do all this planning. Anything else which can be thought of here? I could not think of anything else on this. The other cases, she is engaged in, I could not get any names, so I just use this. So she is engaged in trading of plastic bangles. Any idea whether plastic bangle is subject to GST or not? At least guess, yes or no? I have not bought plastic bangles. Plastic bangle is exempted from GST. So she exports all the bangles to Bangladesh. I'm sure people in Bangladesh will wear plastic bangles. On all the expenses incurred, she is availing ITC. So she is into trading, she is purchasing plastic bangles and she is exporting the plastic bangles to Bangladesh. she is incurring a lot of expenses. So she is paying rent on her building, then she is paying the CA, professional charges she is paying. So there are a lot of expenses which are with the GST. Now the question is, what happens to this GST amount? She is exporting all the plastic bangles to Bangladesh. Can she get refund of this taxes which she has paid on the expenses? Possible? Possible. Exempted goods, if you are exporting, you will still get the refund of taxes which you have incurred on your expenses. But in this case, the manufacturer is in Pina. He has a big factory. He has a lot of machines to manufacture this plastic bangles. I would just assume, okay, I don't know whether machines are required for this or not. But she is not happy with the margin which she is earning. Now, considering this GST, can she do some planning wherein the margin can be increased? Or she can reduce the cost? Can there be some changes in the structure, the way she is operating? Start manufacturing. Yeah. What is the advantage, sir? Yeah. Answer is correct. She can consider manufacturing on her own basis. The biggest difference here when she start manufacturing is, now this Pina factory, whoever is manufacturing and selling to her, can he take the credit? Plastic bangle is exempted goods. In this example, can this manufacturer take the credits on the inputs? Yes or no? Refund is not available. He will not get the credit also, sir, because output is exempted. So this manufacturer, he will not get the credit of the GST which are paid on his machine, on his factory rent, etc. When she manufactures, whatever expenditure she is incurring, whether it could be on machines, rent of factory, etc., she will get the credit. She may not be in a position to manufacture on her own. Then what she can do is, she can enter into a job work model. What she will do is, she will find vendors for the suppliers of inputs. She will get into placing this order. She will say, you send this inputs to this manufacturer. Manufacturer will do this on a job work basis. Right? So in this way also, the credit can be saved. So she will take all the credits. She will pass on these goods to manufacturer, who will also give an invoice on job work basis, wherein he will also charge GST. So this entire thing will become a taxable activity for them. The other option is, she can get into a commission model. So she will find customers in Bangladesh. She will say, you pay me so much commission, you manufacture, you take the credit, you export the goods from Pina to Bangladesh. So this is also some planning which can be done. Possible, but the issue is the credit accumulation will be still there. But can he pay 0.1% on the exempted goods? He will not be able to pay, sir, because the bangle is exempted from GST. This 0.1% you can pay only if it is a taxable goods. So he will not get the option of charging 0.1%. I understood what you are saying, but he cannot charge that because it is exempted goods. If it is a taxable goods, he could have done that. He will charge 0.1%, he will take credit on all his input services. But in case of exempted, it is not possible. Okay, the last case. ABC Limited, so they are engaged in manufacture and supply of fruit juice across India with a production plant in Bangalore. So ABC Limited, in order to increase their sales, so they thought of opening certain market offices in few states like Kerala, Orissa, West Bengal, Chhattisgarh, etc. Now the issue is, okay, the first question is, should they take GST registration in these states? Marketing offices they are having in these 4 states. Should they take registration? Yes or no? Yes. The problem with taking the registration is they have to start with many compliances in GST. GSTR 1, 3B, then you may get some automatic notices to reply, then you have audit. Because if your turnover is crossing on an overall basis 5 crore rupees, then you have to file your GSTR 9C, annual return is also there. So all these compliances will increase for you. You have to put a name on this office with GST number. So can they avoid registration with some planning here? Can they do something here? Sorry? Contract marketing, yes, perfect. So what they can do here is they can get into a contract with some vendor. They will find some person in those 4 states. They will say, you give me a service invoice, you do these and these activities. So that he will give me an invoice, I will take the credit, I will also avoid GST registration in those 4 states. Perfect. The other thing which I had mentioned is close the offices and manage marketing from Bangalore. Okay, so these were certain case scenarios which we had experienced in past years or so. There were many other cases. My request is that when we support the clients for GST compliance, many a times we don't think on this value addition, because this reconciliation itself will take a lot of time. It is not that we can't do, or it is not that we can't think of any new ideas around GST. So it is always possible, but dedicate some time of yours, even though you are taking care of only GST for a client, to see if there is any value addition which is possible. So now we'll get into the cost control options, what can be done here. 11:30 I need to stop. Okay. So what is cost control? How it can be done? So with a regular monitoring, by evaluating various options and trimming the expenditure, we can reduce our cost. So in GST, we need to see how we can reduce our cost. So I always say the best way to reduce your cost in GST is comply with the law 100%, which is almost impossible, I know. At least maybe 95%, 96%, whatever percentage possible. So make sure that you are complying with the law. Otherwise, we will end up doing this reconciliation, always answering the department, then going behind the departmental officers. So all this will have a lot of cost, and you have to, okay, or our clients, so they need to feed us for all this, because we'll not do it free of cost, right? So all this will be there. So the best suggestion which can be there for any client is make sure that you comply with the law. So this compliance is possible only when they are aware of the GST law. GST being a very new law, it's been just 6.5 years. Most of us don't know the GST law completely, and we can understand the situation of these clients. So it is very difficult for them to understand the regular developments which are happening. So make sure that if you are engaged for any GST support, you also update them with the regular changes. Maybe some trainings can be done for those employees so that they are 100% compliance. The other method can be putting this detection, preventive and corrective controls, which can be by way of checklist, standard operating procedure. So we have seen the standard operating procedure, which are very general for tax compliance. It doesn't cover specifically for the actions which needs to be taken in GST. So which is something which we need to guide our clients. SOP will be very, very helpful in making sure that we are fully compliant, and it is also helpful in case of transition. Say the GST person who has been handling the compliance, so he leaves the company, then it becomes a very challenging task for the new person. So when there is a SOP, then straight away he knows what is that he needs to do in GST for this particular company. So as professionals, we can also help our clients in designing this SOP, which can be one more revenue. Then suggesting whether it is good for a client to have in-house compliance or should they outsource. The biggest advantage when they outsource this GST compliance is they can concentrate on their business and they don't have to worry on the numbers or reconciliation. So that is the biggest advantage which you need to communicate. Adopting to information technology, so there is no doubt on this. Without information technology, it is very, very difficult to comply with the GST law. And we know that how competitive it has become for chartered accountants. So we need to see that we adopt the information technology for managing compliance or day-to-day office work, so that we can reduce our fees for the client also, so that we can become even more competitive. Some controls which can be done in procurements: plan to procure goods from registered persons. Why I am saying you have to procure from registered person? What will happen if I procure goods or services from unregistered persons? What is the disadvantage? Huh? Reverse charge compliance may arise, but reverse charge we have very few cases. But what is the other disadvantage which can be there? That is in case of construction. Yeah. The other biggest disadvantage is when you procure from unregistered persons, it means that they are not able to take the input tax credit, which is becoming a cost to them. So your cost of procurement is also high because your vendor is not able to take the input tax credit. Whatever GST you would have paid on his expenses, factory rent, etc., he will be passing on that to you, right? If he is not registered. So this is one. The other biggest disadvantage which can be there is, say he is supposed to get registered, but he is not registered and he has not charged GST to you. Department comes and catches him. They will issue notice, they will attach his bank account. He will not be able to supply his goods to you. So there can be an interruption in your supplies also. That is also possible. And the other possibility is, he can always ask you to reimburse the tax amount also, say if he is in a dominant position. So these are some of the disadvantages which you have when you procure from a unregistered persons. So be very careful on that. Then other things can be time of supply in case of RCM. So many a times we miss to pay taxes within the time limit. We identify this when we are doing this GSTR 9 or 9C. Say in December I identified certain cases for 2022-23. So I will ask the client to pay the GST now with the interest. But can they take the credit of this? Can they take credit of this RCM if they pay now in December for 22-23? Credit will not be possible unless the vendor is an unregistered person. So in case of unregistered person, we have to generate a self-invoice. So the one contention which I can take in case of unregistered person is, I will raise the self-invoice in December month, I will pay the tax in December month through 3B, I will take the credit. The time limit for this credit will be not November 30, 2023, but it will be November 30, 2024. So this one argument is possible in case of unregistered vendors. If my vendors are registered and wherein I need to pay tax under reverse charge, then we will lose the credits if we don't identify before October returns. Creditor's aging analysis, one of the major conditions for taking the credit is making the payment within 180 days. Otherwise, we need to reverse the credit, but the pain point is interest. We need to pay the interest. Many a times, there could be reasons such as the invoice is not approved or the vendor sends me the invoice late. So in those cases, I will have this issue. So keep a track on your creditor's date of invoice also. Return of goods, of course we know that there is a time limit for receiving back the goods from the job workers. So in case of inputs, it has to be 1 year. You can also apply for extension by another 1 year, that is possible. If you are not going to get it back within 1 year, you make sure that you apply for extension. Otherwise, we have to pay the taxes. Like central excise, we don't have the provision for taking back this credit in GST. So that is one issue which can come in GST, which we need to be careful, unless we can prove that it is a sale to job worker. Concept of IST for distribution of credits. So as of now, this is not mandatory. Very recently, there is a circular number 199 which has clarified this. You can do either cross charge or input service distribution for your common expenses. But going forward, it is going to be mandatory. Make sure that you are into the practice of distributing this credits. You can do some planning also around this distribution if it is required. So understanding rule 42 and 43, very, very important. Most of us are complying with this, but issue is in case of capital goods also we are following rule 42. Rule 43 has a separate formula for determining the reversal amount. So there is going to be some mistake which may be happening, just be careful on that. Then planning of procurement of services based on the place of supply. Say I go for a meeting in Delhi, so I stay in Delhi. I don't have an office in Delhi. So the Delhi hotel is charging me CGST, SGST. So can I take the credit of this? I can't take the credit of this. So I need to see if I have a branch in Delhi, I will incur this expenditure from Delhi office maybe. So this is not possible in all the cases, but wherever you have multiple branches, then you need to do some planning around incurring your expenditure so that this will not become an extra cost to you. Periodic check of registration status of vendors. There are a lot of tools. If you Google, you will get on GST website also, you can find this. But you have to do it for each number separately. But there are certain tools wherein you can check this for multiple numbers at a time. So this exercise is going to be very, very important for you going forward, because you know if the vendor he may have cancelled his registration or it may be suspended, but he is still charging you the GST, wherein you will not get the credit. Credit will be restricted for you. So this issue may be there. So wherever you feel that the vendor may be an unorganized person, you need to do this additional check. So certain cost control measures in outward supplies. So decision on claiming or not claiming the concessional rate of tax. Now recently we have started one exercise for one major good transport agency. Presently they are under reverse charge mechanism. So now they want to explore, is it better for them to go for 12% option. So in case of GTA, I can charge 5% without credit, or I can charge 12% with credit. So when we are doing this exercise, we need to do cost benefit analysis. So what are the advantages if I go for 12%? Advantage may be I will get credit on all my procurements, including capex. I may be buying lot of transport vehicles. 28% is being incurred. So the advantage when I charge 12% is I will be able to take this credit and pass on this benefit by reducing my price to my customer. So I can be more competitive in the market. So like this, there could be some advantages and there can be certain disadvantages also which I need to analyze. So time of supply compliance is very, very key. This is being missed out in case of services. I have provided the service, within a period of 30 days I need to issue the invoice. But I will miss this. I will wait for the customer to approve my amount. Then there is a delay. I will end up paying the interest. So here we need to be careful. We need to understand what is the time of supply in case of our services. Based on that, we should be issuing the invoice. Other cost control in documentation, if you see the notices, at least 30% of the notices are towards e-way bill issues. So e-way bill is, the invoice number in e-way bill is not matching with your actual invoice number. Amounts are not matching, HSN is not matching, or it is lapsed. So like this, there are a lot of issues in e-way bill because of notices are being received. So be very, very careful in e-way bill compliance. Wherever possible, you see that you automate. Most of you must be generating this e-invoice by automating. E-way bill generation also can be automated. Once you automate this, the biggest advantage is there cannot be any mistake in the contents. Authorization for ITC reversal. So this is also one control which we should have. So what happens is whenever there is a payment required in cash, there is some person above us who will authorize the payments. But when I have a sufficient credits, I will not bother about the reversal of credits which are happening. What we do is whenever departmental person says that something is not correct, you need to reverse this credit, I will just reverse the credit because I have a lot of credits with me. This should not happen. Any payment, it could be by way of cash or it could be by way of reversal of credit. I need to make sure that there is a system of authorization by the higher authorities. Regular reconciliation is must, so don't do this reconciliation only for GST or 9 and 9C purpose. This should be done on a monthly basis, including your outward supplies, so that your job becomes very easier when it comes to statutory audits or when it comes to filing of the annual returns. Rate master updation for outward and inward supplies. So we have to ensure that there is a proper control on updation of this. We were doing an audit for one of the FMCG company, so which is closed now. So it was taken over by one of the biggest companies in India. So the biggest mistake which was happening in this company, which was taken over, is each of these stores, they had the authorization to change the rates. Say for example, paneer. You go to a Jayanagar store, paneer they were charging 5%. You go to MG Road store, they were charging 0%. Same company. So this was the lack of control which was there. So ensure that there is a proper control. One is updation of these rates. Next is control on these rates. Everybody should not have this control to change it. Automation we have talked, SOP also we have talked. Then in case of exports, we discussed some schemes. So there are option of ROTEP scripts which is possible. Then there is also duty drawback which is possible. Then we discussed about advance authorization. Then we also discussed about the capital goods procurement without payment of any taxes in case of under EPCG scheme. So there is also another option which is mover scheme. So in mover scheme, the biggest advantage is even if you have domestic supplies only, still you can go for this option. You can import the goods without payment of any custom duties. You have to pay the custom duties only when you are selling the goods. You have imported the goods under mover scheme, you are not paid any taxes. The finished goods you are exporting, you don't have to pay any taxes. You are clearing this in a domestic market, then you have to pay this custom duties when you are selling this finished goods in the domestic market. Say you imported today, you are going to sell this in domestic market, say in the month of July 2024. You have to pay this custom duty only in July 24 without any interest. So this is the biggest advantage which is there when you go for mover scheme. Of course, there is a compliance requirement. You should have a proper demarcation, you should have a monthly returns which needs to be filed, you should have a proper stock records. But again, you have to do this cost benefit analysis to see whether it is good to go for this benefit wherein I am going to have some positive cash flows for 6 months in our example. Other best practices. So the internal personnel, they should have a proper understanding of the GST law. So you may have many of your clients wherein you may be supporting in GST or may not be supporting. But this is one additional thing for you to consider whether you should get into a GST practice. First, you should learn the law, understand the law. There are various sources. The best source which I always suggest for anybody who is joining our office is, first you should go through the background material of our institute. It is a very, very good book. The biggest advantage in this book is they have covered the law as it is. There is an extract of a particular section or the rules. After that, there is a commentary with examples. So if you want to learn the subject, you can start with background material to understand it very, very well. And of course, there are a lot of programs which are being conducted by ICA, so always we have this option. So see that whether you should do the similar trainings for your client personals also, at least on the basics, so that they can reduce their errors and increase their compliance level. So maker checker concept, it has to be there. So this is something which we can suggest. Some of us may be internal audit professionals. We may not be checking this tax compliance very well. As you know, GST is a new law. So we can see that at least on the basics, we check the GST compliance as a part of our internal audit. Or if we are not doing, say we are doing only GST work, we can suggest the client to suggest their internal auditors to cover other things in this GST as well. Online, there are a lot of materials. So one is the background material, which we just talked about. Hiregange Academy, so there also we are publishing a lot of articles. There are free booklets also which are available if you want to learn. Tax Sutra, then we have Tax Guru websites. There is a lot of free material available. Compared to this pre-GST regime, the information which is available on the internet is huge in case of GST. Any topic you search, you get at least 2 or 3 articles on any complicated topics. So make sure that you are updating yourself with the GST law. Yeah, so this is what I had for today's discussion. If there are any questions, then I'm happy to take it up. We have 5 more minutes. Yeah. Okay. The question which sir is asking is, there is a condition of reversing the credit if we don't make the payment within 180 days to a vendor. So is there any possibility of avoiding interest? Okay. I don't see any possibility of avoiding interest. Of course, there will be a contracts wherein the payment term may be much more than the credit period, maybe say 1 year, 6 months, or more than 6 months. So that is always possible. One argument which is being taken here is that there is no failure in our payment. It is that the payment term itself says that I have to pay the vendor after 1 year. So when that is the case, that should not be questioned, interest should not be levied. But this has been discussed in GST Council meetings also, sir. So what they are saying is, the supplier has to pay the taxes when he supplies the goods, irrespective of whether he receives the consideration from the customer or not. So in order to protect the interest of the suppliers, mainly the MSME suppliers, they want to continue with this rule so that they always have the motivation of paying within 180 days at least. So that they want to continue. The other thing which we can explore is, when I know that I can't make the payment within 180 days, instead of waiting for 180 days to complete and then reverse this credit with interest, can I reverse this just before 180 days? So that is something which is possible. I am not saying this is litigation free. This can be subject to litigation, but the argument which is in our favor is that the provision says that we have to add this after 6 months in our returns, pay with interest. When I do this before 6 months, then I can always say that the interest will apply only after 6 months. Then in this case, it should not be applied. I have reversed this before 6 months. So this argument is possible, but again, it can be disputed as well. Yeah, any other questions? Okay, thank you. Thank you. I also would like to thank the Bangalore branch for this wonderful opportunity. Now I'll hand it over to sir. Yeah.
Real life cases were discussed for tax planning, along with important things to be kept in mind and to be complied with. How to give value addition to your clients. It was a fantastic 1.5 hour session. A round of applause for that fantastic session by CA Mahadeva. On behalf of members present here and all the managing committee members of Bangalore branch, we would like to hand over a memento to speaker as a gratitude and respect. Can I call CA Shripad HN, our managing committee member, to come out to dais and then do the honors. Thank you, Shripad. Thank you, sir. Members, now let's break for coffee and reassemble sharply at 11:55 to attend second session by CA Akshay M. Hiregange. Thank you.